But we begin with the markets, as we always do here on NYSE Live. And joining me now is Eric Criscolo, market strategist for the New York Stock Exchange. Eric, welcome to the show.
Good morning, Ashley. Great to be here as usual.
Yeah, happy holidays.
Thank you. You too, of course.
All right. So session is 30 minutes away. What are you going to be tracking most closely in today's session?
Yeah, well, like you said, the GDP number came out. The economy's running hot. I mean, that was a larger than expected number. So there is growth in the economy. The consumer held up well. The consumer really kind of buoyed, they were really the driver of that high print, which is good to see. But also you saw a very high level of inflation, or higher than expected level of inflation. The PCE number that the Fed is very, very targeted on. That's their primary look at inflation when they go to measure these things. So the economy is running hot. Inflation is still very elevated, and we are in a time where the Fed is cutting rates, or they have been cutting rates. So there's kind of a tension going on right now. We see it playing out now, and so that's why you kind of see the market is. It kind of took a little bit of a decline after the print came out. Treasury yields went up because of that inflation print, plus with the economy running hot. So there's kind of some dueling flows going on right now as we start trading.
And how much of an impact do you think that number is going to have on the Fed's next rate cut decision in January?
Well, I mean, we've seen a lot of dissension between everyone at the FOMC committee, right? Stephen Moran, he's the big dissenter as far as wanting to cut. He wants to cut, 50 basis points at a clip. He's been the big dissenter. He was doing some rounds yesterday on TV, laying out his reasoning why he wants to cut more. With this print now, behind us, or what we just saw, it would be interesting to get his takes on it. Cutting with the inflation still high, cutting with the economy running hot. There's a lot of puts and takes as far as people concerned in the committee about employment versus people concerned about inflation. So I think that that's just going to continue to play out. We're going to get more Fed speakers coming out, putting out their views. And we're also going to get a new Fed chair nominee at some point very soon. So all this is coming together. I wish I knew exactly where it was going, but there's going to be a lot of discussion going forward about where policy is going to go as far as the monetary policy from the FOMC and the Fed.
All right, and it is the holiday season, and the so-called Santa Claus rally begins tomorrow. Do you think we're going to see gains through the end of the year?
I hope so. If you're long, I hope so. But I really don't know where it's going to go. Usually, like you said, it's one of the strongest parts of the calendar for a variety of reasons. It's kind of setting up well. We had a great session yesterday. We had a good session yesterday that came off of a solid session on Friday. Today we'll see where it goes with all the economic data coming out. Tomorrow's a half day. Probably, a lot of traders on vacation. Maybe some retail flow comes in. We'll see. But typically it's a strong part of the calendar. Sets us up well for 2026. But as far as if we're going to be up or down, if Santa Claus comes or not, well, he'll be coming. Just will the rally be coming? I'm not sure about. We'll have to find out.
All right, and since you last joined us, we received some fresh inflation data showing that year-over-year inflation growth slowed to 2.7%. What does that tell you about the state of the economy?
Yeah, well, I think what you're seeing is the data is a mess. From the slowdown, the government's trying to catch up. We just saw the numbers that just came out with the GDP numbers this morning. They're kind of in conflict as far as is inflation coming up or going down. So I think that we still need to see a lot more data, a lot more normalized data. We have to get through the October, November, December time periods where, the Census Bureau, all these government agencies are just trying to catch up. They're imputing a lot of factors. The direct collection was really hampered as far as, them being able to do their job in an efficient manner, getting the data, the correct data, cleaning the data. So I think we're just going to have to wade through a lot of noise until we get into some normalized, data processing in the beginning of next year. So unfortunately, the Fed's in a bind. They have to act on what they're getting, but what they're getting is probably not the cleanest that they've ever seen as far as the data goes. So I'm glad I'm not part of the committee because I don't know what I'd be doing.
And as the year has been winding down, we've seen some rotation out of AI. What do you think is in store for AI next year?
It's $1 million question. If I knew, I might not be here. So, I think everyone is looking at, will that AI trade in general continue, right? Will those general, 5, 10, 15 tech names, will they continue to trade higher? The ones we always know. Will the ancillary names, the energy names, the infrastructure names, all those construction names, will they continue to benefit, or will there be a big rotation out of that entire trade into new narratives like healthcare? We saw healthcare perk up in the end of this year. Can that sector take on some of those gains that the AI trade was seeing this year? Can other sectors rise up? Things that have been really underappreciated, like the real estate sector, or some of the materials sector. Some of these areas of the market that haven't been as loved this year. Can they kind of be rotated into next year? I think that's a big question to see how this stock market evolves going into 2026.
All right, Eric Cascolo, market strategist for the NYSE. Thank you so much for joining us.
My pleasure, Ashley. Happy holidays, everyone.
Happy holidays.
Thank you.